Ladies and gentlemen, welcome back. Please take a seat. The next presentation will be done by Benjamin Bommhardt, all the way from Munich. He will tell us a little bit more about the history and the future, and the past and present of crypto exchanges. So please, a big applause for Benjamin Bommhardt.
Introduction. Yes, as Bash already had mentioned, my name is Benjamin Bommhardt. But let me first tell you about what this all about. In my eyes, it's important to understand how exchanges work and why they had success or why they hadn't. So it's all about finding similarities between those exchanges, try to cluster them into similar exchanges so we can forge generations. And in the end, we have to look out what lessons did we learn out of those exchanges and how can we utilize those knowledge to be more successful when it comes to launching an own exchange. I first have to put on a small disclaimer because it's only my own observations, that the presentation I'm about to give you is only my observation and not those of Draglet. A generation does not mean that this is a predominant phase of some generation. It just means that this is a current trend that could be observed in this and that point of time, and it does not necessarily mean that the second generation is always better than the first generation. So let's get to the agenda. First, I'm going to tell you something about me and about us. Then we are going to jump into the generations. The first, the zero generation. For the first generation, even started as the voice generation. After that, in my eyes, there will be the business enablers, sophistication as the first, second generation. The third generation will be the diversification. The fourth generation, in my eyes, is a white label exchange because it's a very new business model that seems to get some traction nowadays. And I will also give you an outlook. What might you expect in the near future regarding the exchanges? So about me, I'm 32 years old. I was born near Munich and I currently live in Munich, which is in Bavaria, a very conservative part of Germany. I sort of focused on online trends or on trading in general. For example, I played Counter-Strike and Quake competitively, which not was enabling me to pay for my daily life because pro gaming wasn't some sort of a thing back then. It was not possible to earn some money. So I had to start to study to get my income safe. So I studied in Germany and UK, and I'm involved in Bitcoin since 2013, at the early beginning of 2013. And since the start of 2014, I went all in on Bitcoin or Draglet. And the first conference I have been on was the Bitcoin conference in 2014 in March, I guess it was. And yeah, now it's the first time that I'm allowed to speak on a conference, so it's like first time here in Amsterdam. So Draglet is a corporate that I co-founded in Munich. I will give you some detail about the timeline in the next slide. We have a lot of experience when it comes to the development of these softwares for German corporates. We also have some years, roughly between 15 and 20 years experience in the banking sector, mostly coming from our CEO. And our CEO was involved in Bitcoin since 2011. He was an early adopter, which I wasn't. And our business case is to provide exchange software as a service, as a white label exchange, but I will get into that into detail later. If you have a look at the Draglet timeline, we formed ourselves early 2013. We started the development of our exchange software in June. We founded our corporate in October to launch our open beta test in November 2013. Since May, we started our white label services with full concentration on online channels. In August, we successfully applied for our first patent. They are going to follow some other patents. And now in September, we are on the verge of getting our first customers on it, and now we're going to scale our business. To demonstrate some context, which is mainly connected to date and events that occurred on those dates, I'm going to use timelines, which hopefully give you a better understanding of the timely events and how they are interconnected to each other. We have timeline, we have events and self-explanatory generations that are existing in those time spans. At the beginning there was Bitcoin, nothing else. The first Bitcoin exchange went online in February 2010, which is more than a year later. How is that possible? Why hasn't there been any exchange? The answer is a pizza deal that occurred in May 2010. Someone was very desperate because he couldn't get any value out of his bitcoins. So he was forced to pay 10,000 bitcoins for pizzas, which were worth $25. This shows us that still, after the first exchange went online, it wasn't used very much because there wasn't any reason to. Why should you change something that wasn't of any worth at all? So I'm going to call that the generation 0, which is the void, because trades only then occurred on Internet Relay Chat or on Bitcoin Talk Forum or other forums. If you had, or if you wanted to trade on Internet Relay Chat, you had some trading partners, you don't know, is this person going to scam you? So you have to work on the trust. Bitcoin OTC started to have an own system of trust in 2010, late 2010. So even the generation 0 trading was getting some traction at the end of 2010, which is very lately. Well, because there was no serious exchange rate for the Bitcoin back then, there were no really exchanges available. Trading was mostly on IRC and on Bitcoin Talk. The pizza trade showed us that there is not really has been the necessity for a Bitcoin exchange. There was some sort of escrow that people were protected from mail trades. I think that only 10% of all trades in IT went wrong. And the trust was the important base. But if you want to trade like this is this does cost a lot of effort because you have to check every single trading partner. You have to check his trust and then you have to give him some trust so other people know what this person is all about. This is a good or a bad trader. So between 2009 and 2010 we had roughly the 0 generation, and after that we didn't have only one exchange being online, but then MTGOX went Bitcoin. I don't know if you have any experience about MTGOX. MTGOX originally was a trading card site where people could trade cards from the Magic the Gathering game. It was the first page that there was some sort of able to handle a real order matching, so it could be adapted to the Bitcoin. Nevertheless, it was an exchange that had a lot of problems, and I'm trying to get into those problems to give you some overview of what effect happened based on one situation. So the first generation I would like to entitle is the business enablement, because it roughly enabled people to trade on the website. Before that, people had to trade over chat and forum, and this was the first way to register yourself on the site, to deposit bitcoins, and then to trade them to fiat money. They were very, very badly, sophisticated. The problem was the user experience was really horrible. Did someone of you try to trade on MTGOX in 2012 and 13?
Before that, yes.
Or before that? It could be that the web page was down. It could have been that your orders were not matched now, but minutes later, where the exchange rate had shifted like $50 in one direction, and you didn't have any alternative. Furthermore, those exchanges had really problems with exploits and hacks, like I'm going to demonstrate you. And in my eyes, also the first generations are peer-to-peer trading platforms like Bitcoin.de that are centralized, but then offer a peer-to-peer trading. The problems that the generation 1 exchanges faced, for example, the Bitcoin market offered PayPal as payment, and what could you do? You could send a PayPal payment and then revert because whatever. They had a big fraud problem, and after that the CEO of Bitcoin market was missing in action, so that's about for the first exchange we had. After that, MTGOX followed. They had the problem that Mark Carpedes was getting into business. He bought the MTGOX in March 2011. After that, this user data was hacked, a lot of accounts were compromised. In January 12th, the banking problem started, that if you wanted to transact money to MTGOX, you either had to get a call from your bank, which was like, you know that you are going to transact money to a banking account that's supposed to be some sort of scam. This happened already in 2012. In May 2013, 2 million have been seized by the feds. In May 13, MTGOX has been sued by CoinLab, and in August 13, another $5 million were seized from the feds, from MTGOX. And if you have a look at those particular events, you could see that in July 13, the fiat withdrawal already took 1.5 months, and in September it took over 22 months to withdraw your fiat money from MTGOX. And this had to have a serious effect on what's happened on MTGOX, because if you have a look at MTGOX, MTGOX was largely responsible for most of all trades that happened in Bitcoin, and they were like 80–90% of all trading volume. And at the time the fiat withdrawal were delayed, you could see that the transaction volume of MTGOX was fading rapidly, really rapidly fading. They were the dominant leader before that, and after that it didn't end too well, because the transaction volume is one thing that goes down. Another thing is, if you have an account balance on MTGOX, if you have liquidity there as a user, how are you supposed to get the liquidity of your exchange platform? You are not able to withdraw fiat money, so what you're doing, you buy Bitcoins, and you may transact those and to get out of the system. So people started to buy Bitcoin. And if you have a rough observation of the prices of the Bitcoin pages that were the most important back then, you could see from the time the fiat withdrawal was delayed, the price started to increase. At the beginning, it was only $10 to $30, the deviation. But the problem was then, in February 2014, Bitcoin withdrawals were also cancelled. They said it was because some transaction malleability, which was then not confirmed by the Bitcoin community itself. And customers were completely in uncertainty because they didn't know what's going to happen. Are we going to be able to withdraw our BTCs or not? And this really had a dramatic effect on the price. We could see here that there was a price deviation going on which went even higher. We had a deviation of roughly $150, maybe $100. And from the time the BTC withdrawals was disabled, you could see that the price crashed, bottom. People tried to sell their accounts for maybe 20 to 70% of what was in liquidity in the accounts. So when people took the gamble, were like, okay, if MTGOX goes back, I made a lot of money. But it didn't. So what can we learn out of the first generation? We learned that the used technology has to be 100% safe and sound, because MTGOX wasn't working with a standardized Bitcoin even, but with a customized one. You also have to have flawless business processes that can deal with those withdrawal problems, and you need to have some sort of security that the strategic effects of those withdrawal problems are not going to write your business down, in the case like MTGOX did. And even if those things happen, you need to have clear customer communication so people know what's going to happen and can therefore react. And you should also you shouldn't underestimate strategic effects on your business, because those might come in very hard. So when we are going to form the second generation, we know that we need a minimum level of security and more features that make the customers use the exchange, because now we are not talking about business enablers. There are not 1 or 3 exchanges, there are more exchanges. So exchanges need to get the customers going, and you're going to do that with either a very high level of security or good features. So the second generation, in my eyes, is the sophistication phase, because we need to have a solid technical base in terms of order matching, a real order matching. We need a legal alignment, because otherwise feds are going to seize our funds and are going to close down our business. Two-factor authentication and code storage was back then more or less another enabler, because you had to have those features, otherwise you wouldn't have very certain customers. The other thing is you need to have also additional features like mining contracts or deposit interests, like MCX Now did it. Or another way was to offer a radical fee model. So it was like you need to have something special that made you get some customers. And the ultimate aim was to offer more security, convenience, and unique features to the customers. When we are looking at those exchanges, Bitcoin 24 was one of those exchanges because they offered 0% trading fee. But they died. I'm going to get into detail now. MCX Now was one of those exchanges that offered interest on deposits. And just to show you how this generation 2 was still plagued by problems, in April 2013 a study came out which told that over roughly the half of every new exchange that is being launched is going to go down after all. And a positive example, Kraken. When we had a look at Bitcoin 24, they offered a PayPal payment and a smooth trading experience next to instant registration and 0% trading fees. And at that point of time, they had more euro volume than MT Gox did. The problem was they had a slight bug in the order matching engine that if there was some performance going on the system and I did an unlimited sale order, I got triple the amount of euros. So I sold 1 Bitcoin and got 1,200 euros. And then I buy another Bitcoin or buy 3 Bitcoin and I power sell them and I got the triple amount. I didn't exploit the system, a friend of mine did, and he could extract about 40 Bitcoin within half an hour. But the problem is, this is a zero-sum game. What you can get out of the system is what's missing other users. The problem was too lately registered. The site went down, the transactions were rolled back, so people had the right account balance. But the problem was that then simultaneously authorities in Germany and Poland confiscated the banking accounts of Bitcoin24.com. I think 1 year ago people were allowed to withdraw 70% of their account balance. I also could do that. And if you have a look at Bitcoin24.com now, you go to the chat, you see scam site, no, admins are in prison, site is abandoned. That's the way how an exchange can end. When you have a look at Kraken.com, Kraken was, I think, the first exchange that put their focus on auditability, which was a very important step in my eyes, because that's a very good way to get your customers' confidence. And you can see in our second generation that the legal alignment is really a business enabler, because if you have a look at MT Gox that had so much legal problems, went down at the end, Bitcoin24 had really a bad problem in regards of legal alignment. And a solid order matching engine wouldn't have been too bad for Bitcoin24 in my eyes. So now we have sort of a technical stability. We have the sophistication phase behind us. Now we need to integrate more altcoins. We need to have real crypto exchanges going on, because it's not about Bitcoin and Litecoin, it's about having 150 or more alternative currencies. So we need to have more trading pairs, or we might use hybrid exchanges that are a combination between a pool and an exchange like CXIO is. And also, a very nice thing about diversification is it enables you to launch a crypto exchange which doesn't really touch fiat at all, and you have a very, very lower entry barriers regarding on the location you are working in. So, having a look at the third generation, when do you think the first crypto exchange went online? Roughly. I'm going to solve the mystery. In my eyes, it was 11. It was Gearbox. It wasn't a real cryptocurrency exchange like crypto was, but they offered the Linden dollar, which is the currency of Second Life, in trading with Bitcoin.
And there are crypto, virtual.
Yeah, but at least they support one crypto, so yeah, it's can be argued. But I think it's in 11 there was an important impulse set by Xerox, in my eyes. Johan?
Yeah, I noticed that a while ago. Oh, sorry.
Yeah, first level.
Does it work? Yeah.
Yes.
A while ago, I actually saw Verbox, and I was wondering, I never heard of that exchange before, so I created an account, I looked in it, and it's quite expensive.
And awful.
And it's awful, the user experience is terrible, but they're still alive.
Yeah, they are alive.
So miraculously, it's maybe one of the miracles if you look at crypto exchanges.
Exactly when observing the other exchanges that are going to pop up in a second.
Okay, yeah, thanks.
Thank you. So Crypto went online early 2013, which is very late, but this was the generation of the diversification. You could see Poloniex, you could see Mintel, Crypto Rush, which are more or less famous examples. But they started 3 years later than Xerox. And what you just said, they are still active since, I don't know, 3 or 4 years. And if you have a look at those Crypto Rush or other crypto exchanges, I traded on Crypto Rush myself. They had a very decent trading volumes when it comes to altcoin exchange. And they really had a pop-up when they made an update to their order matching engine. Please be so fair and do not trade. Sorry, we are dealing with financial instruments here. Not in my eyes a very good approach, but in the end May 14 showed they got hacked. But they still try to get up, they try to relaunch the website, but I think the history has shown once you get hacked the trust is gone and it's extremely hard to get it back. Extremely hard. If you have a look at Mintel, they also were hacked due to a vulnerability in the hot wallet. What does tell us? We need the cold storage. We need the cold wallet. For every 150 trading pairs we have, quite an effort. Quite an effort. The nice thing about the Mintel hack was that 30% of all Vericoins were hacked. Every existing Vericoin, 30%, that's the harsh amount, but then there was a hard fork to revert this hacking. And this is what I like about crypto. It's like, oh God, we have a financial crisis, roll back. I don't care. Okay, maybe a little bit simplified, but. And another example is Poloniex that also got hacked pretty hard. The trick was to set up numerous withdrawals at the same time simultaneously that override your account balance, but the system doesn't care at all because there were no plausibility checks or anything like that. So basically it shows us diversification is important, yet costly. Therefore, each coin has different mechanics that require stability and effort. And we are not talking about cold storage for altcoins here. We are talking about, I don't know, 5 different proof of whatever systems that might work. And every system has its own sensibility, which might be a problem if the exchange isn't handling it right. Yeah. In my eyes, an important sentence is focus on a solid software before you expand to alternative coins. And this is a thing Kraken did very well in my eyes because they focused on the main currency, Bitcoin and maybe Litecoin, and they then rolled out another cryptocurrency or cryptocurrencies depending on the trading volume or on the relevancy. So now we have a problem because we have two huge pillars an exchange has to look for. The first one is the technology lag. You need to have the latest technology, you need to have an unbreakable, unhackable system. So you need to keep pace with the technology. But nevertheless, we need to have legal alignment for your business, which is then a high effort itself. So white label exchanges came into life, which basically are cooperations between two parties. The first white label exchanges that went online in 2012 was Baurum. After that came Alpha Point or Buttercoin out of the United States, Bex from Canada, and at the end of 2013, Dragon, the first European competitor, entered the game, and after that BTC Trader, which is supposed to sit in Germany. Also, I think Buttercoin and Bex are quite famous around here, or at least you've heard the name at least once. So a white label exchange works like the following. You have a cooperational structure. You have two parties. One is focusing on the legal aspect, and one is focusing on the technological aspect. In our case, we are the technological service deliverer. The thing is, you need to have those parties connected. So the one that operates the exchange needs to get feedback from the customers and channel it to the technology part that's going to, or trying to improve the system and to make the stuff better that the customer said wasn't running too good. There are also 4 big parts for each party. The customer, in our case, has to promote the exchange to drive those marketing campaigns. He has to have a look on the business development. How is the exchange performing? What plans and content could be developed to further improve the performance of the exchange? You need to process the support of the exchange. So if users have a problem, somebody needs to get the support issues fixed. And also the withdrawals and deposits mainly are a manual process, especially in the cold storage. You also need to have the compliance, you need to have supervision and the active connections to the local authorities to enable further business stability. And what the white label exchange deliverer is then going to do, he's customizing, he's renting the service, customizing the service, and sets everything up so it just gets hosted online. It gets then developed further, it gets further hardened, further tested, and additional features and functions will then be developed in communication with the business development team. Also, we will have a B2B, or we have a B2B support which gives out quarterly reports to our exchange customers, and also some reports on what bugs were found and how many could have been fixed and what not. And also the server maintenance, software upgrade, availability, and stability are also huge factors. In my eyes, white label exchanges are a very nice thing to go because it allows you some sort of scalability. It doesn't really matter if we process 1 exchange or 10 exchanges. We can scale the business, we can use our vanilla client, then modify it. We also have a risk distribution. If you are trying to start an exchange right now, you would have like a lot of time to first develop the software, then you need another time for maturity and for the hardening. Maybe you can go online, and then you're going down, and you have sunk costs in the software development, you have sunk costs in your legal alignment, in the formation of the business, and the risk distribution works very well in my eyes because we take a low risk that our customer is going to fail, and the customer takes a low risk that we are going to fail, which we hope, and yeah, it won't happen. So another thing is the time to market, because with our software you could theoretically go online within a few days, which allows you a lot of slower time to market compared to getting your software done, your exchange software done yourself. So the last generations that's going to come now is the generation 5 plus, what's about to come. What do you think is the biggest Bitcoin exchange right now?
BTR.
Face to face.
Somewhere in China.
Bitcoin funds?
796. Has anybody heard of this exchange site? It's very new, and I think it's overriding Bitstam's volume by far. The thing is, it's a derivatives exchange. They are offering margin trading. I think this is one of the newest trends we could observe right now. The people are trying to get into those diversification thingy with derivatives. In my eyes, I don't like this development very much because I'm more the sustainable guy. But what can you do about it? In my eyes, there will be a heavy focus on derivatives and margin trading. What could be also thinkable is To move away from those classic structures, how an exchange could look like, and you could also take an exchange with an order book, combine it with a broker, and connect liquidity from other exchanges. I think we are going to see a lot of those hybrid exchanges. It is also possible that we are going to have themed exchanges. For example, there's going to be a space exchange, which only trades space-related cryptocurrencies. I think we have like 50 to 20 other, loads of them. Or some sort of sustainability exchange, where you can trade alternative currencies, which are mainly backed up by sustainable products like biogas or fertilizer or whatever. And of course, usability is going to be polished, because we need to get mainstream adoption, and this won't happen as long as the usability won't go up. And of course, the decentralized aspect is going to be another aspect. 1 year ago, people in Bitcoin talk started to post, who needs classic exchanges? Everything is going to be decentralized soon, but I still see the main volume on centralized exchanges. Just as we heard before, I think it's perfectly legal to say the customer may decide if he wants to trade on a decentralized exchange or a centralized. I think there is enough of space for all of us, and let the user decide, let the customer decide. Yeah, let's finish with a small outlook for Draglet. I think that our base principle is sophistication. We took roughly 4 months for our order matching engine, and then 3.5 months just for our wallet to keep it safe. And as far as we reach our sophistication stage, we are then going with the diversification. So currently we are implementing new altcoins, but we didn't want to add new altcoins before our software base was really major enough. And after our patents have been approved, we might go to the open source and open source our software. Up to that time, it's a sensible issue. And also, shared liquidity amongst exchanges is an important point. If someone is interested in this matter, we can talk after that presentation. It's a little bit more complicated issue, but I think liquidity is one of our main goals, because if some investor is going to buy loads of bitcoins or is going to sell lots of bitcoins, we need to have some liquidity on the market, because the more liquidity we have, the lesser the volatility will be. And volatility is one of the biggest problems Bitcoin has to face yet. Thanks for your attention.
Are there any questions?
I was wondering, when you look at centralized exchange models, or maybe in this case hybrid centralized exchange models, I was wondering, have you also already looked at possibilities to combine decentralized exchange technologies with centralized exchange models?
Mm-hmm.
The one is quite slow. For example, if you trade on Next or Counterparty, it could take on Next at least 30 seconds for the deal to go through.
Mm-hmm.
On Counterparty, it could take 15 minutes.
Yeah.
And so that's a big issue. But I was just wondering if you guys have considered that, and maybe if you have plans for doing something with that.
Well, our use case for our customers mainly was to enable the high-frequency trading. So we decided not to make use of the multi-signature approach, which Bitalo followed. Bitalo was holding a presentation last time, and they offer a peer-to-peer trading exchange which relies on the blockchain. So we try to follow the way we want to have a hot wallet, we want to have a high-frequency trading opportunity. We followed the decentralized approach in terms of what if we have the opportunity to share liquidity amongst exchanges.
Mm-hmm.
So if you are going to start a new exchange, you have the same problem. You have no liquidity in your order book. So what do you need to do? You need to get your customers to open orders.
Yeah.
A way to lower those entry barriers is to allow the so-called global matching amongst other exchanges. So if you're charting an exchange in China, you register yourself, you can then as user decide, do you want to get matched on the Chinese exchange where you registered or somewhere in Romania or Australia, whatever. And then the decentralized aspect comes into play, but it's more a centralized approach with a decentralized support. But
Okay.
Are there any more?
I have a question and I have a remark. I'll start with my remark. Way back when, in 2011, I already predicted that Mt. Gox was entirely unreliable, so I got out of it. And this was due to my experience. I also happened to make software for exchanges, but for a totally different market. And what I saw in Mt. Gox was that there was this person or persons who the technique that were driving the business of the exchange, which is upside down. When I see exchanges, when our software we build, there's a very strict separation between the people who run the market operators, and who run the technology. And that separation was absent in Mt. Gox, and with many exchanges we still see today. To me, these are a red flag. When technology drives the business, you get very strange mistakes and a lack of accountability. So I still use that as a red flag, and I did that back in 2011. I sent business away from Mt. Gox because I explained to them that it would fail and was accumulating all kinds of skeletons in closets already in 2011. Could never recover from that. And that's what we saw unfold over a couple of years.
Okay.
So I kind of missed that in your stories. You already had a couple of points that tell what was going on. But one thing that is interesting is the internal structure of business, and particularly this separation. With your own company, Dragnet, as you explained it, you have that separation more or less automatically because you are providing the service. But here I see a little bit of a different problem. What kind of guarantees are you going to create? Because my customers, if my software doesn't run for 3 days, they are bankrupt. It's that simple. There is no further guaranteeing going on. It's going to be a lot of litigation because 3 days of non-functioning is bankruptcy. Now I think with Bitcoin exchanges it's less stringent than that. You could probably be out of service for 2 weeks or so. Mt. Gox was out of service once for 2 weeks without even affecting the price, which was very strange. So I think in this new ecology you might be able to do that. But what kind of guarantees are you going to give to your customers? Like, oops, my server didn't work. Oops, there's a little hole in my software.
Well, in the IT business, normally there are service level agreements which get conducted between those two parties. And I guess that we will give as an SLA to availability, which will be 99.9. I don't think that we will be the 99.99 thingy because it's hard to fulfill. Well, we have a guaranteed time of failover in terms of server outage. I think the biggest issue will be to have a guarantee for the safety of the Bitcoin. So you need to have someone that insures your Bitcoin. Up to yet, there is no business in the world that's making an audit and then, based on the audit of the infrastructure of the security, giving us a guarantee.
You are holding the Bitcoin.
We are not holding the Bitcoin, the customers are holding the Bitcoin based on our server architecture with an automated cold storage process, yeah. But that's one of the issues that are going to be clarified, or that need to be clarified, that's right, yeah.
So do you already have scenarios in place if a hole is found in the software? Are you going to shut down the exchanges then?
Yeah, of course. We currently are making a hack challenge, so we are putting between 10 and 20 Bitcoin on our wallet, and then we are going to say, guys, get your Bitcoins, try to hack our system. This will be the first sort of security. But you're absolutely right, that's one of the business enablers in this business, and this solution has to be found. But we are currently in negotiations with some provider that might give us the guarantee. or an insurance for the Bitcoin.
Insurance, yeah.
Are there any more questions?
And regarding the empty GOX, as I explained, I entered Bitcoin in 2013. So I started trading on GOX, but I think GOX was 13 as shit as an 11. Yeah, basically.
Any more questions?
Yes, you spoke about the sort of future of the exchanges. In particular, you spoke about sort of development into themed exchanges. Now, you mentioned a few things, but somehow you lost me on this topic.
Okay.
Could you elaborate a little bit more about how you see this develop? I mean,
Themed exchanges?
Yeah, these two examples. One was related around spaces, and the other one was sustainability. Can you elaborate a little bit more on how you see this?
Well, if you're going to have 1,000 cryptocurrencies in the future, how are people then having the overview? I think that people might have the overview when talking about themes, because every theme has its own use case. People from Dogecoin or Redcoin or some other social currency are mostly the same. So are people from sustainable currencies, because they all follow the same purpose. And therefore, in my eyes, it would make sense to make themed exchanges, and this has been confirmed by a request.
But do you see it then, for example, do you see it in terms of community-based currencies or social networking, exchange currencies, or I'm a little bit confused in my head to understand what you're trying to say. Maybe because I'm not familiar with Dogecoin and these other currencies. Maybe that's the problem.
Okay.
As I see it, a lot of these virtual currencies are sort of neutral currencies. I mean, they're not dealing with a specific user group or people in a certain profession, or people who are a sort of green mentality, or people who want to eat biological food, or what I can understand is that, for example, in this type of carbohydrates, you now already have these big exchanges that were set up for trading these quotas. But that is a little bit off our radar. I mean, in the world we're talking about of Bitcoin and all these other virtual currencies, that's off our radar screen. I mean, from a generic point of view, they would fall under the definition of a themed exchange. Is that the area you're looking for, or?
My guess would be that nowadays exchanges are mostly successful because of some technological aspect, or some attributes or some conditions that have to be fulfilled or existent. And I think we're going to move away from that, because most of exchanges will fulfill those technical conditions. So it's not about having technological factors as a USP.
Exactly, because ultimately 95% of your users of your currency, I mean, these are people who just know how to switch off the computer or operate their mobile phone. I mean, these people are really interested in whether they have a virtual wallet, whether they have a wallet that they want an easy interface to use, whether it's a piece of software on their PC, or whether it's an application on the mobile phone, or whether it's hosted in the cloud. These people, they couldn't care less. It's only when you get a scandal, like we're now having with Apple and iCloud, that all of a sudden everybody gets a sort of rude awakening. They all start getting concerned about the cloud. And obviously, you've explained a lot about things that have happened, or when trades cannot be executed. So you're absolutely right that the technology, from an insider perspective, and from the operators of an exchange, it's a mission-critical game. Like this gentleman said over there, if you have a non-performance or you have an outage, then almost your credibility is instantly impacted by this event.
Well, your customers are bankrupt. They are impacted.
Well, ultimately, of course, it's a very new exchange. So this has big implications on the internet. But still, I'm having problems understanding the themed exchange concept in all of this.
If I may, because I think it's interesting. I think it's to keep it very simple. It's a lot also about marketing. So if you want people to use an exchange,
Yes.
for example, there's a lot of people that like the theme of space. You know, going to Mars, going to the moon, and there are many cryptocurrencies right now that have a space-themed name.
Okay.
For example, there's Mars Coin for people that are going to be living on Mars eventually. They have big dreams. You have Moon Coin, and it's got that name because they want the coin to be really high in value, as it were going to the moon.
Okay, a high aspiration
Yeah.
concept.
And so there's all these coins that have different names, and because, well, because they usually have a fun theme, or you know, they have something, and that's supposed to take these users along. So if you create an exchange that has a certain theme and only those coins come in,
Okay.
that would be very interesting for some users. Yeah. I forgot to mention Astro Coin, by the way.
I sort of translated this to a sort of either a social networking site or a special interest group around a sort of an existing social networking platform, because then you have traction, because you already have so many people involved in your community site, or you hope to get them involved into your online gaming platform, something like that. Yeah.
The exchanges we've been talking about seem to be all exchanges that are interacted with by humans. Some of that are interacted with by humans,
Okay.
human API, human interface. Some have a programmatic API that trading bots. As far as I know, they are only used for trading Bitcoin against Bitcoin, as it were. I envisage that the Bitcoin technology and also the exchange technology will become much broader very fast throughout the world, and not just cryptocurrencies, all kinds of trades. One of my favorite examples is like my refrigerator negotiating on some sort of exchange for the cheapest power it can get at a certain time of the day. Does your company or have a vision on slowly morphing into a much broader software substrate almost that will exchange stuff, not just bitcoins and crypto coins, and do this at a micro level?
Yeah, we have most certainly some strategic plans in terms of connecting a payment processing or merchant network, but not on the level you're talking about, on the home living level. No.
So still with humans only. Yeah.
The warring report.
Any more questions, remarks, observations?
You are approving for patents,
Yeah.
and then you will maybe open source it. I mean, what's the logic behind it?
The logic behind this, why should we spend 1 year of our life creating a software that some else could copycat? If we
Yeah, but I
didn't.
mean, that's the essence of open source.
Yeah, but the essence of open source,
Patents are open source, by definition.
Yeah, okay, but they're not free to say.
our CEO is a very big fan of CEO, but why should you make open source and endanger your business? When you can open source it on a later point and take
to
that.
say it like this, how do you view open source developers using patented open source software? I mean, are you going to, what kind of license are you considering?
I can't answer that question, to be honest. I'm not into that patent business all the way.
Hello, so I have a question concerning regulation and legal stuff. So, do you think that exchanges should be forbidden from holding large deposits for which a banking license would be required? So it's really a question about You know, is it really an exchange or is it the bank which holds deposits?
Well, an exchange that is not holding bigger amounts of fiat is having only is having fewer liquidity. So it would hurt the exchange, but on the other hand, it would then maybe protect the user. It's hard to answer, to be honest. I haven't thought of impacts or implications regarding this. But in my eyes, as long as the process that's sort of protecting the customer's capital is safe and sound, I don't see a problem in holding more customers. Yeah, but sure, the banking license problem is really a thing. That's why those crypto exchanges, I think, are coming out of the ground like mushrooms.
Does that answer your question?
More or less.
Yeah. Any more questions? Okay, then I thank Benjamin Bommhardt for giving this talk about
Thank you very much.
generations of crypto exchanges. Please a big applause for Benjamin. We will now have the lunch break. There will be lunch in the room besides here. And around 1 o'clock we will continue. So please have some and be back around 1. Okay.